Hello fellow traders. This video uses NVIDIA Level 2 order book as a practical real-world case. The goal is to help you as a trader or analyst recognize how large buy and sell orders and prints that react with them send signals about where trends may shift, momentum accelerates, or reversals can occur. We'll focus specifically on actionable insights that short-term traders and tape readers use. Today we'll get into what large orders and prints on Level 2 tell us about stock trends by Pajama Trader. What Level 2 shows. Level 2 reveals live bid and ask prices with their corresponding sizes, providing a clear picture of where liquidity clusters exist and how deep the market is at each price. It captures the market action beyond the last traded price and displays the footprints of institutional players through large order size. Level 2 data is essential for serious traders. It allows you to look past where the market has traded and see where others are waiting. This depth of market view means that you can spot if an institutional, market maker, or smart money is stacking orders at specific levels. These large sizes can act as significant magnets or barriers for price. When thousands of shares sit on the bid or ask, other traders often react accordingly. Rapid changes in size or order placement also provides critical clues about upcoming momentum and potential liquidity events. If this video bridged the gaps with you, give it a like. Share this with other traders looking to learn more about Level 2, and consider subscribing for more Market Edge videos. What large orders mean. Large buy orders, known as bid walls, serve as support zones that can slow or stop price decline. Large sell orders, or ask walls, act as resistance zones, capping rallies and often indicating where sellers are concentrated. When you see a flurry of traders quickly hitting the large order and consuming it, it shows true conviction, whether aggressive buying or selling. The relationship between size and prints helps confirm the market's intent. When traders talk about walls, they mean areas where the size is unusually large relative to its surroundings. These become battlegrounds. Buyers defend against drops with the bid wall, while sellers put up resistance with an ask wall. If you observe a surge in prints hitting these walls and the levels at quick succession, especially if the large order is fully taken out, it's a textbook case of strong conviction. This dynamic can tip off a breakout or trend acceleration, but only if the prints match the size and the wall disappears. NVIDIA example. The NVIDIA order book shows a significant ask at 182.80 with 20,982 shares available to sell. The sizes of the bids directly below are much smaller and unable to match the price the ask wall. This imbalance in order size is a sign of strong selling pressure right at that level, which makes 182.80 a critical inflection point for NVIDIA in the short term. Here, the 182.80 ask wall is not just notable, it's dominant, dwarfing by nearby buy orders by a wide margin. Such a large order is placed by a big trader, institution, or market maker. When you see this, know that the price is likely to react meaningful, either stalling or backing off, or less often, breaking through in a wave of intense buying. Comparing it to bids highlights seller control for now. As a trader, your next step is to watch to see how the price and prints respond to this wall. So I wanted to go over Level 2. So over in this area here, you see these large prints, 5,000, 2,900, 2,500, 5,000 popping in and out. To me, that's the wall of sellers. So when I see that information, I look to see if I can find it on the chart. And I can see that it has hit 183 a few times this month. And to go back into the year, it seems to be a sticking point from way back here. So when I see that it rejects at that, I look to go and grab contracts to buy puts, to execute, or to get out of when it hits 173. But pretty much using the Level 2 in these levels helps you identify where the possible pivots are coming from. Trade plan from this setup. Trading this scenario means being ready for both momentum and reversal setups. If a buyer clears the 182.80 wall decisively, a breakout long trade can be taken. If the price repeatedly fails the wall and quickly refills after each attempt, a short setup becomes attractive. Protect your trades by placing stops just beyond the major liquidity wall, minimizing the risk of false moves. This best plan is condition-based, not predictive. Act only after clarity. If big prints eat through 182.80 and subsequent asks aren't substantial, that's your sign for a momentum long. If sellers keep flooding 182.80, consider a short with your stop just above the wall. This minimizes noise and maximizes an edge by using actual liquidity as your risk reference. Always track how size changes after your entry. Real walls don't vanish instantly, but fake outs do. Key takeaways. Large orders in the Level 2 order book identify trend inflection points. Whether price reverses or accelerates, prints through these walls show strength or hesitation in real time. Use Level 2 alongside with your technical and sentiment analysis to confirm setups and sharpen your trade timing. The critical takeaways is that the large orders and prints on Level 2 aren't just numbers. They're behavior clues for market participants with real money at stake. Remember, you see outsized bids or asks, anticipate a meaningful reaction, and let the tape, the prints, confirm who's in control. Combine these insights with your broader strategy, and Level 2 becomes your secret source for reading and trading trends more confidently. Thanks again for watching.